What's up, guys? Welcome back to another episode of Filling Your Cup. I'm your host, David.
I'm your other host, Calvin. What's going on?
And this week, we're going to talk about President-elect Joe Biden proposed tax plan. There's a couple bullets we want to go over. We're not gonna go over everything. We're just gonna go over a few bullets that we think are important. So the first one is so they're talking about imposing a 12.4%, basically the Social Security payroll income tax on income earned above 400K. So how it works currently right now is that up to 137K, right? If you make up to 137K, that's all tax at the 12.4%. And if you are employed by a company, you pay half of that. You pay half of the 12.4%. And if you are a self-employed, you pay the full 12.4%. But you only pay up to the 137. Well, the proposed tax plan, what happens is if you make over 400K, you're gonna get that Social Security tax is gonna come back. So anything you make over 400K is gonna get taxed at the 12.4%. Which if you are a high income earner, it's gonna hurt because usually you're done after the first 137K. But now this new proposed tax, you're gonna be you and your employer is gonna be paying more. So I mean, how we see is I don't know if it's good or bad because I don't know how many people in America makes over 400K, but I'm sure there's quite a few, and it's gonna hurt them a lot more than hurt us. Let's just say that. Yeah. So Calvin, it's number two.
Cool. Number two, raising the maximum tax bracket from 37% to 39.6%. So President Trump lowered the maximum tax bracket from 39.6 to 37, and Joe Biden wants to kind of undo that and bring it back to 39.6. What that means is if you look at the very bottom of the chart, if you make it does, so we're currently being taxed at a marginal tax bracket. So it doesn't mean if you're making over $518,000, you're gonna be taxed. The whole thing will be taxed at the 39.6% rate. What it means is the first $0 to $9,000, $9,875, you'll be taxed at 10%. From $9,000 to $40,000, it will be 12, and so on and so forth. But the new proposed tax plan will just affect the top tier bracket. If you make over the $518,401, you'll be taxed at the 39.6 tax bracket. So yeah. Going down to number three. Okay, capital gains. So capital gains just means that any investments that you sell will be taxed. So the current, as of now, incomes over 440,000 per year, you'll be paying a flat rate of 20% capital gains tax plus a 3.8 investment surtax. So 23.8% total. But for Joe Biden's proposed tax plan, if you make over $1 million of capital gains, you would be taxed as ordinary income plus the 3.8% surtax. So if you're making over $1 million per year on capital gains, you'll be taxed at a whopping 43.4%. If you make over $1 million, which is
these are for long-term capital gains. So this basically is long-term capital gains. So yeah, I mean it's gonna hurt. It's gonna hurt. We're gonna talk more at the end of the video to give our thoughts, but it looks kind of painful. So number four. They're basically kind of reversing what President Trump did. He's gonna increase corporate tax rate from 21 to 28%, and basically imposing a 15% tax on corporations with $100 million or more. So currently how it works is if you're a corporation, right? and you have you make money, you have revenue and sales, and you have COGS, and after the end of the year, if you are actually losing money, you get to deduct that loss to future earnings. So that's kind of how it works. So that's why. So that's like So if this year you lost $15, next year if you make $15, they kind of cancel out, and you pay zero. Or next year if you make $20, you cancel out the 15 with this year, and then you get taxed on the $5. But what this plan is, they're proposing a 15% tax on revenue over 100 million. So you're gonna be paying something this year. You don't get to just write it off in future years. You're gonna be paying off. You're gonna be paying something this year. So for corporations kind of like Lyft and Uber, these companies that don't make money, they're not gonna get this benefit of just free riding. Just free riding on losses moving forward. They're gonna have to be paying something. So I don't know if it's good or bad per se, but I mean, I guess it's kind of I'm on the fence on this one, because one, if you're not making money, it's kind of hard to justify taxing somebody if they're not making money. If they're actually running a deficit and you're trying to tax them, kind of doesn't really make sense. But secondly, I mean, there are loopholes in this where a corporation report a loss, maybe just to try to carry forward, and maybe this will disincentivize corporation from losing money. As oddly as that sounds, because nobody wants to lose money, but I mean, I'm sure there's some tax loophole involved in this, but this is kind of interesting one.
Yep. And number 5. So if you're a first-time home buyer, you will get some help from President-elect Joe Biden by allowing a $15,000 tax credit for first-time home buyers. $15,000 refundable tax credit. And yeah, for first-time home buyers.
Yeah, so I mean that's kind of encouraging you to first home buyers to buy a home, because I guess even though home sales are kind of soaring, I guess it's soaring in parts of the country, not everywhere, right? So I guess it's kind of trying to incentivize people to own a home, because buying a home is like it's a really pivotal part in Americans' economy, the transaction involving buying and selling homes. So I can see how this kind of like trying to stimulate it, the economy. So I mean, I have no really concerns on this one. I think it's good. Maybe it's
Yeah.
I don't know. I'm not sure how I feel about this one. So so overall, I think this tax plan, it just means more taxes, right? And you can look at all the taxes, and you're like, hey, usually it just affects people making more than 400K, right? But then you got to realize that a lot of these businesses are get taxed at this rate. They are like kind of like small business owners, right? And I think it's gonna affect them a lot, especially right now during COVID. A lot of them are not in business, and I feel like any tax levy against them is just gonna hurt their chances of coming back. So I don't know if, because like think about it, any taxes on corporation, end of the day, it's gonna get passed down to the consumers, right? Don't I mean, it's a fallacy to think that just because they get taxed, it doesn't affect you. If corporations get taxed more, they're gonna charge more for their products. So like that McChicken burger used to be $1, and now it's like $1.35. You could say it's inflation, but I mean, you can argue it's taxes too. I mean, you gotta look at the timing of it, but nobody likes increased taxes, but I think it's a good and bad thing, right? Because you want to increase taxes so we can cut our deficit, but at the same time is just because you're taxing more money and you give the government more money, how are they spending the money? That's the problem, right? You can give a drug addict as much money as you want, but if they're not spending the money wisely, it's just gonna go to waste. And a lot of the money we spend in our government goes to administrative costs, which is kind of ridiculous. So a lot of it doesn't go back to the people. So that's why we're kind of like against the taxes. Like they're gonna say like like for Social Security tax, they're increasing these taxes too because that pool of fund is underfunded, and I wonder why. Maybe because they're pillaging it from years of pillaging it, right? Because they've been borrowing against the Social Security money, which was supposed to be for people's future. So I don't know. It's kind of I'm not a big fan of the Social Security because I think people are actually better with money. Like, I mean, if it's your money, you're gonna take care of that money, a lot better than if someone else was gonna handle it, right? So that's kind of our 2 cents. Any closing thoughts on these proposed tax plan, Calvin?
No, I agree. So the people most affected, like you said, will be kind of like your white collar jobs, your doctors, your lawyers, your high income earners, will feel the burn most. But you're like you said, also the small business owner, the self employed people will get double whammy for the number one bullet point that we talked about because they are the employer and they are self-employed, so they have to pay the whole 12%. And if they are a successful self-employed making over 400,000, they would have to pay another 12%. Whereas if you're not a self-employed, you will only pay half of that. So
I mean, either way, it's just another tax on these small businesses. Because
yeah,
what we worry about small businesses, because large corporations, they can handle this tax. I mean, if you make $100 million, 12.4%, it's gonna hurt, but it's not gonna hurt as someone who's making $100 or $500,000, and they have to pay like additional 12.4 on the 100K. I mean, it's gonna hurt them more because they're gonna need that money to to grow the business, right? And this kind of limits their opportunity to grow because you're taxing, you're getting another tax on them on top of all the other taxes already. So, I mean, this is a interesting proposal. Let's see how it plays out. I mean, not everything is set in stone, but from looks at it, I don't think it's gonna affect us too much on this time around. Hopefully down the road, it's gonna affect us.
yeah, hopefully.
By then maybe we'll be making so much money that we're like, hey, yo, no more taxes. But I mean, we'll see. We'll see. We'll cross that bridge when we get there. So, thanks for tuning to this video, and let us know what's your thoughts on Joe Biden's proposed tax plan. And yeah, we'll catch you next time.
Peace.